Lightning like Steve McQueen. I'm in the fast lane when the light turns green. And I built tough, I ain't nothing but grit. Cause I made rugged blood, sweat, and spit. Yeah, like a horse I fly. Better brace yourself in for a bumpy ride. I like to play hard, but I work harder. And I weather the storm cause I'm built stronger.
Hey guys, before we jump into the episode, I wanted to let you know it is brought to you by Denim. As a business owner myself, I personally know the importance of financial stability and preserving cash flow to help navigate through any freight market. With Denim's comprehensive service offering, you now have an all-in-one financial partner whose platform includes factoring, payments, freight audit, document collection management, and analytics, which help keep your business financially healthy and increase your team's time to focus on revenue-producing activities. You can also take advantage of Denim's free credit check, which they perform on all of your customers. And Denim will proactively reach out to you if they spot any signs of credit deterioration. Finally, Denim always pays your carriers first. As a broker, this is imperative to preserving your credit score in the market, which ultimately helps you become a broker of choice to your carrier partners. Are you ready to learn more? Visit denim.com to schedule a demo today. Just do me a favor and let them know that the Freight Coach sent you.
This episode is brought to you by SPI Logistics, the premier freight agent logistics firm in North America. For over 40 years, SPI has been diligently building the most successful freight agent network to provide first-class relationships for our shippers, receivers, and carrier partners. We are more than another transportation network. We are a dedicated team of professionals united by one singular purpose, and that is to expedite our agents' success. All of our agents are set up for success on day one, as they are provided with a full suite of support staff that is ready to assist them with everything from after-hours emergencies to financial and administrative needs on a no-fee basis. This way, you can focus on continuing to grow your business. There is no financial risk to start, and you have the ability to earn up to 75% in commissions. If you are looking to take control of your financial future and build your business with the backing of one of the most successful logistics firms in North America, visit www.spi3pl.com to learn more. Do me a favor and let them know that the Freight Coach sent you.
What is up, ladies and gentlemen? We are back. We are live. It's the Freight Coach Podcast, the top podcast in transportation, coming to you guys every single weekday, 8:30 a.m. Pacific, 10:30 Central, to break down some industry headlines, but most importantly, provide some actual insight into what you can do with all of this information. I'm going to save the rest of the intro on this because I want to get my friend up here on the show, you guys, and it's my favorite segment of the month. It's our Financial Fridays, and it's my favorite because I don't know finance all of that much, right? Like, I know the basics about it, but I've learned so much over these last 4 years of being self-employed, and I want to bring him on. I wish he could come on every single Friday to talk about all of this stuff, but having a higher financial acumen, increasing your financial IQ, and then, but most importantly, trying to be educated on the right moves to make in your business to improve your overall financial health. It's very important to me. But with that being said, I got my man Sean with Denim back on the show. Let's go.
Hey,
dude. What's up?
What is up? Hey, listen, we're bringing guests on this show because we want to give you actionable things that you can take away and you can use in your day-to-day life. Okay. That's what we're doing.
Yes, dude, that is the truth. It is 100% the truth, man. And I agree wholeheartedly. It's, cause it's like, man, where else do you turn to and go, like, especially if you don't know somebody who's built a successful business that can kind of lead you in those directions, where do you learn and where do you turn and then how do you know that you're even asking the right questions and stuff like that? And, it's like, that's why I love having you come on the show. And then, James Courier, he's with Finlock, and they do financing for trucks and trailers and stuff like that. Like, I mean, how else would you know what questions to ask or if you're even getting the right deal and stuff like that? Because, like, I think people have, I was talking to a buddy of mine who's a very successful entrepreneur yesterday, and he's like, oh, yeah, you have a business, so you're instantly a millionaire, right? Because that's what everybody thinks. You're liquid, you have all of this capital, and you're instantly successful and flying on private jets.
What do they say? It's like some of the Silicon Valley investors only want to invest on people's third try because, like, you got to pay that tuition, like, this is expensive. It's expensive to learn these lessons, especially if you don't have a mentor to, like, help you way through. But, like, these lessons are expensive. We're hopefully making it a little cheaper on the Freight Coach podcast.
Dude. And that's exactly it. Right. Because it's like, I mean, I'm looking at, I'm always trying to think ahead in my business, right? Like, yeah, I have to, as soon as we're done with this, I'm going to go make my sales calls for the day because I got to do my daily tasks. But like, I'm also thinking, all right, what's going to happen in 12 months from now, 24 months from now? Do I make a tough call now and then pay a little bit of a price up front, but it's going to be a better deal down the road and stuff like that. So I'm constantly going back and forth on that. And, one thing that like I'm very passionate about like business credit and understanding that people need to build a credit score in their business, especially in brokerage. And I was talking to a buddy of mine, another friend of mine who also owns a freight brokerage, who said the very same thing. He said, and it was Chris Brewer who was on the show. And he said the hardest thing was getting an established credit rating out there to where people would haul your freight.
100%. And like, hot take out there, for the orange shirt gang, like, it's going to be really hard to be a freight broker if truckers don't want to work for you, right? It's going to be really hard to move freight if nobody takes your brokerage seriously because you don't have the credit and you're not able to secure capacity, right? It's going to be really hard. You're brokering what at that point, right?
Yeah.
Leads for another broker who can haul the freight, because that's not going to work.
Yeah. Yeah, man. It's dude, I just think of it like, what could somebody do though, man? Like let's start from like day one.
Yeah.
What could somebody do to start focus on building their business credit?
Yeah. First of all, what is your business credit, right? Is probably the first thing. And to maybe put a little finer point on like why business credit matters to you. Like, the most obvious example is you need people to want to be able to do business with you. And business credit is a representation of your reliability as a business owner and whether or not people are going to want to trust you. It's not an end all be all, right? Like, any credit risk person out there is going to know that, like, Ansonia doesn't mean that if I get an Ansonia report, doesn't mean that I'm free and clear, but at least gives you enough data points to where you can help kind of make a more informed decision. So like, if you're working with large carriers, if you're looking with carrier factors, like if you want to get lower rates on services, drive up your net income for those who want to take money home at the end of the day, you've got to be able to be price competitive on some of these financial products. They all use some version of a credit score to be able to make those decisions for you, to be able to price you effectively. So like, don't get it twisted. Like, this is a super important topic. And if you screw it up, you might as well open a new MC and start over again, because like some of this stuff can be super, super challenging to dig yourself out of if you find yourself in a deep hole. And like, the people that have, I think there's one brokerage I think you and I saw just this past week that kind of re-entered the freight brokerage market after a relatively public explosion, and like, they're gonna have a tough go out there. It's gonna be tough sledding to get people to want to trust you after you've had an incident like that, right? And that really comes back to what you believe on their credit, right? And what's reported on their credit.
No, and that's exactly it. And I think that it's honestly your business card early on. Because people need to make sure, because it's such a risk, and this is where I don't know why this brings in any area of confusion to anybody at all, but you are such a high risk when you start a business, and I think like people are honestly, Sean, I think that they're sold a bill of goods online that like, oh, you're an entrepreneur, you're a boss bitch or whatever, these people say out
buy
there.
Some storage units, man. What, like,
yeah. Snap your fingers, get 7 streams of income, and then all of a sudden you're successful and stuff because you started. But like, it is so like, you might know the stats offhand here, man. What is the failure rate of businesses out there in the first 12 months?
45%.
45% may fail within the first year. How many fail within the second year?
I think it's another 30% of that crew. So especially if you're a venture-backed startup, which I know not a ton of folks are, but the success rate of going beyond a Series A, I think, is 6%.
Oh wow!
So like, it's like bootstrapping is hard. Like, being a venture-backed startup is hard. Entrepreneurship is hard. Being an SMB is hard, right? Like, all that stuff is hard. And I saw somebody talking about mentioned passive income. 45% of real estate investments result in a loss. So like, there's There's risk for everybody out there, no matter what line of business you're in, right? And so you've got to be able to manage it. And that's like a critical part of why a credit score is important to you.
Yeah. So here's from the Bureau of Labor Statistics that 45% of all businesses will fail within 5 years, 65 within 10 years, and only 25% of businesses make it 15 years or more. And then
I think that's pretty generous.
Yeah,
I would have expected it to be a lot lower. Yeah.
Yeah, because it shows that let's go here. 1 year survival rates. Survival in businesses vary from year to year. Yeah, man, I think it's low. I think I've heard like it's some like 90% of businesses fail within the first year and stuff like that. Like I've heard some very, very high.
You can leave the lights on at an LLC for $400 a year. So
yeah, no, I know. But I look back now because like, I have a CPA, I have a bookkeeper, I keep my books really clean. That was the main reason why I was able to buy a house as an entrepreneur because when we were dealing with because my personal credit score was good, but they're like, oh, you're self-employed. And I'm like, yeah. They're like, can you send us over, your financials and stuff? And I'm like, okay, do you want my CPA or my bookkeeper to send it to you? And then they're like, wait, what? And I'm like, yeah, no, I have a CPA, I have a bookkeeper, I have all of my financials, I have projections, I have current invoices, I have, all of this stuff. And they're like, oh, damn. They're like, yeah, send all of that over if you have it. And then after it was all said and done and they approved us, they told me point blank, they're like, the only reason we approved you is because you have a CPA, you have clean financials, everything was trackable. We can project your risk based on your current financials and everything in business. And we can actually predict where you're going to go with it. And I'm like, damn, thank God I listened to that DM from that CPA who hit me up here in Phoenix. Joe is the guy, man. That's who I work with. Joe Harding. I've worked with him since I started my business here. He's local in Phoenix. He's a CPA. He's been on my show before. And, because we talk about a lot of that stuff. And then but here's the thing though, when I went to go buy a truck in my business's name, because there was a major tax break of buying it in 2023 as opposed to 2024. There was like 20%. It was an 80% depreciating asset. I could write off 80% as opposed to 60, which should drop to in 2024. But same thing, man. I had to put a personal guarantee down on there because even though I had good business credit, even though I had clean financials, it was my first loan in my business's name. So technically, I was a high risk loan. And, again, I had business credit. I had all of this stuff. I did everything right, but you're still a high risk loan no matter what. So it's like, again, like people need to look at all of these things to really prepare themselves because like, I was saying this yesterday with a friend of mine. I said, ultimately, Sean, when it boils down to it, selling freight is the easy part of business. Like ultimately, when you deduce it down to it, selling freight's the easy part. It's all the other shit that comes into play that really starts to make it complicated.
I think plenty of our clients would agree with that, especially when it comes to their financial situation. It's like, man, I just want to move freight. I get it. And you know this, Chris, like some people are an entrepreneur and some people are an entrepreneur. And so, depending on which flavor you are, right, your mileage may vary. Right. Yeah. So just, be thoughtful of that. And I hope that for the listeners out there, we sold you on why business credit is something you should care about and like why this is something you should keep a close eye on. But here's the reality of it. Being able to actively manage your business credit is confusing as hell. Yeah. And it really depends on which party you are trying to build credit for. It depends on what you want to use this credit for. And it depends on who the consumers are of the credit reports that you are trying to perform well on, right? Yeah. And how they read it. So like Chris Brewer is a really smart guy and he worked really hard on making sure that he was able to get on the top list of these factoring companies so that they see River City Logistics and they recognize that like, oh yeah, these guys are creditworthy and it's good to go. Yeah. Do you want to hear my takes? Are you ready?
No, I'm ready for it, man. And I also want to spin this in a sense for all of my, because Dennis Everett, he's an owner op out there who watches the show, and there's a bunch of owner ops and small fleets and trucking companies that watch the show as well. So it's like, I think all of these strategies that we're talking about here is applicable to whether you're a brokerage or a trucking company on how to improve your business credit.
Yeah, 1,000%. And so like for somebody like Dennis, I would care a lot about folks like equipment financing lenders. I would care a lot about like insurance brokers and how they look at pricing, right? And so if you're a freight broker, I'd care a lot about carrier factors. I'd care a lot about really large carriers. So if you're trying to move LTL or you're trying to use Landstar or whoever, right? And then the last group that I would care about is this like boogeyman group, is like the credit agencies. So they're the ones generating these reports. And so if those are your main stakeholders in your like need to manage your business credit better, you'll be sad to know that each one of them has a little bit of a different way of measuring and creating your credit score and your credit report. And so you need to be conscious about managing each one effectively. So what that means is some carrier factors and some large carriers out there just pull the Ansonia report. Great. Experian, whatever. You got to know where you're at on those reports. Buy your own report every couple times a year, maybe, depending on how like your business is growing. Know where you stand on those reports and know who is reporting on your behalf so that you can make your payments accordingly. And the reason why I say that is like for Denim, like we report on the credit for our carrier clients because they're the ones who are receiving the money. So like we can report on behalf of our clients who are carriers that the brokers paid in X days. We're free to report on that. For our broker clients who work with other carrier factors, it is the carrier factors that need to report on when they receive the money from that broker. So a common misconception is that those who send the money are reporting on when the money is getting sent. And that's not always the case. It's when the money is being received on how that information is actually getting back into those credit reporting agencies. Am I walking with you on that?
Yeah. So I wanted to ask though, so how could a guy like Dennis Everett, who's an owner op, how could he make sure that this is being reported properly to benefit his business?
Yeah, so two things I would want to look at if I was Dennis. I'd purchase my Ansonia report or I'd purchase my Experian report, and I'd want to see who is reporting on me. And for Dennis, that might be my truck financer, right? They would be reporting on-time payments, right? It might be if I've got a loan out like a line of credit or something. I might want to report on-time payments for somebody like that. Like that was where I would get that information from. If I was a freight broker, I would ask the carrier factor of the carriers that I work with on what my credit standing is for the business. Because not all carrier factors use the Ansonia reports and use the credit bureau reports. They keep their own credit. And so for somebody like my friend Chris Brewer, or for the other brokerages out there, you need to get a trial credit limit at these carrier factors. You need to let them haul a load or two on good faith. I'm new here. Like, give me a shot at it. And this is a pretty standard operating procedure for these carrier factors. They call it like a trial line, right? And what you need to do for that trial line is do exactly what Chris Brewer said. Pay immediately. You need to pay these test lines immediately, because when the carrier factors are looking for the payment and you pay immediately, your reliability in their eyes shoots through the moon, because they are keeping a close eye on your account and they want to understand that you're a reliable payer and that you do what you say, basically, right? To give you the green light for this freight broker on this carrier factors portal on whether or not they can work with them.
How many people overlook this simple step here, and how detrimental is this to their business in the long term?
I think the biggest mistake that people make is that they got a hot load, they got a carrier they want to work with. The carrier says, "Oh yeah, this is my factoring company. They said they don't haul for you. You're not approved, whatever. And they immediately go into panic mode, right? And so they're like, I need a credit line. I need this. I need that. And all of a sudden it becomes a really tough situation to where you've got kind of both sides digging in. And if you don't have a plan kind of right out of the gate, you don't look like you have your shit together, right? And so what you need to do is you need to ask for a trial line. You need to provide a reference, such as your factoring company. We can provide you a letter of reference if you're a client of ours that says, they're our client, they work with us, we provide their working capital. And then you say, I will pay you day 2, right?
Yeah.
You have your letter of reference, you request your trial line, and you follow through on it.
Yeah.
And that's a great way to be able to make sure that you get the credit that you need. And if you don't do that, you're going to be stuck holding the bag, and you're going to try, because you can't go from, I'm a brand new broker, I want a credit line, let me in and give me the golden goose. Nobody's going to feel comfortable about that from a risk perspective. So you've got to really lean into their process of whomever you're using, whether it be a carrier factor or an equipment financing company, or, whatever the situation may be, so that you can fall within kind of their risk framework, like their risk decision framework of how you can get access to their credit. We have plenty of clients that play nice. They do super well. They let the system work for them, and it's great. And we have plenty of others that would like to swim upstream, and you're a salmon, and you're having a really tough time getting freight, and you got a really tough time making your commitments to your customers, right? To keep the wheels moving.
Mm-hmm. No, and this is, I mean, again, man, it's like all, like when I do say selling freight's the easy part, this is the prime example of that, right? Because like the reality is, especially if like, unless you're an agent, right? Like unless you're with SPI Logistics, who, you're a freight agent right away with your book of business, you're not necessarily worried about this component. But for those individuals that do go out there on their own for the first time, and even if they haven't they have established customers and everything else, like this is a roadblock that they're going to find. Like I worked, the last brokerage that I had worked at before I went out on my own, and we were a startup. I mean, I was like the 3rd employee there. It was one of my best friends who started it. And he's still running it today, but like, dude, that was our biggest threat to our business right away, was as carriers were not taking our freight because we weren't factored, or or their factoring company wouldn't invoice their shit with us. And like we had to prepay some dudes. Like, man, fortunately, that was back in like 2017 and stuff like that. So it wasn't, complete Wild West out there on certain things. But like, yeah, man. And, we also found, a couple of carriers who were like, nah, man, I'm the founder of this carrier. People took a risk on me back in the day. We'll make it work. Don't worry about it. But that was very minimal that
few and far between.
Few and far between, man. And there were so many carriers who were like, oh, who are you guys? All right, hold on. I got to call my factoring company. Then they call us back and they're like, yeah, man, no, can't do it, man. Our factoring company says you're too much of a risk. And you're like,
yeah, of course.
I got this going on and everything else. But again, like this is a very real scenario that people will face. Like it's not an if in this one, it's when it happens to you. And, I want people to be prepared for this stuff, right? Because otherwise you're going to want to throw your hands up in the air. This leads to that failure rate in business, because like that's generally what causes people to quit is they're going to look at this situation and be like, man, I worked so hard to get this first load. I did everything right. And then I get to this, and then now this, why do I even bother? So again, like this is the point of this.
You got to feel for these folks too, right? Because like,
I got everything on the line, Sean. Like, Sean, if this doesn't work, I got no backup plan, man. I got every dollar I've ever made in my life wrapped up into this shit, right? So that's how serious I take this stuff.
Here's the thing too, is that even if you get that trial load, even if you do exactly what you say, even if you follow this little playbook here to a T, that's not it, right? So like, here's the next step of this equation. So after you do the trial load, you get your first freight in, you need to work with this factoring company. Let's say it's the biggest one, right? Any of the 3.
Yeah.
Find 3, 4, 5 lows with this factoring company right out of the gate. Don't pay on day 2 anymore. Pay on day 28, because here's how this works. After you get greenlit from a trial credit line to a full approval credit line, right, which is like what you want.
Yeah.
you need to be able to let money sit on the books for a close of month. And so we say 28 days is the best, 25 days, somewhere in that area. So here's what happens. These factoring companies will close their books. They will see who has open aging with them, and they will see who's inside 30 days, who's outside 30 days, and they'll make credit decisions accordingly.
Mm-hmm.
If you keep paying on day 2, I'm sorry to the folks out there that want to go above and beyond. If you keep paying on day 2, you're not going to show up on this aging report. They're going to knock your credit down again, and they're going to say that you're not utilizing the line with us, and we think that you're inactive. I'm sorry.
You're saying that if you pay your invoices too fast, that's a problem.
After you get out of the gate on the trial, kind of the trial line thing, and you start paying your invoices too fast to the factoring company, it will look like you are not using their carriers, and they will take you off again. So,
dude, you know what's funny?
I don't make the rules, man.
No,
I'm just telling you how the game is played.
Dude, I've been told that actually off the record by some people that I know about, like, if you have a business credit card, like, do not pay it early, literally pay it on the due date or within 48 hours prior, right? So if it's due on the 10th, pay it no earlier than the 8th, just to make sure that it shows up there. Because if you want, and their thing is if you want to ever get a higher credit limit with them, you can't pay it off and always have a zero balance. You have to carry one, so then they can see that you're actually utilizing it. And that's a factor that breaks it down, is because if they're like, if you just pay it off instantly, it's not a bad thing if you only want, say, a $30,000 credit line on your credit card. But if you want a $300,000 credit line, they're not going to give it to you if it shows that you're not using it.
100%. And so when these carrier factoring companies or these major carriers or whatever look at their books, they're going to say, hey, it looks like my buddy, the freight coach, has $400,000 of payments showing inside of 30 days and $0 of payments showing outside of 30 days. Mm-hmm. This is great. What an awesome person for us who's very reliable and pays on time. If you pay on day 2, that $400,000 is going to look like 12, right? Yeah. It's going to look like 18. It's not going to be even close to what they would consider to be kind of critical and strategic and helpful and risk adverse and all that stuff. You're going to look like a broker who's run their first load, even though you might be working with them for 6 months, which is not your look. That's what we're trying to avoid with this credit score problem.
How much do you guys monitor that stuff for your guys' customers, right? So, like, say Freight Coach Logistics is now Denim's #1 customer. We're coming in, but I'm new. I don't have any of this. Are we working together throughout these early stages? Are you guys advocating for us with the factoring companies, for the trucking companies, and all of that?
Yeah. So this has been a huge topic for our clients, and it's something that we have felt for years, maybe up until probably 6 months ago, like sort of helpless. We're kind of like, we want to help you guys. We're going to make your payments. We can make a call. We're going to do the best we can, but they're not writing us, right? They're not underwriting us. They're writing you as the business owner. And so there's really only so much kind of wink, wink, nod, nod, nudge, nudge that we can provide until 6 months ago. I think my one of our folks, Brandon's in the chat, super knowledgeable about this, and a couple of his clients he's worked directly with on this, and a few of our partnerships folks have gotten us some meetings where we can try and uncover, a bit of the cloak on like how this stuff gets made, so that we can play the game that they want us to play, and we can help our clients with that, right? And so earlier this year, we flipped all of our factor payments to 25 days for all of our clients, and they were like, why did you just do that? And we were like, we did the work. We heard from you. We pounded the pavement. We got the meetings. We did the work. We're going to show it to you. Here's how it's supposed to work. And so we have seen one of our Ben Jones, who sits on my team. You've probably seen some of his stuff on LinkedIn, Chris. Absolutely. He's posted some screenshots of his clients being like, thanks so much. Credit score gone up 40 points in the last 60 days. Thanks so much. Credit line doubled 90 days. Like it's a long road. It's not instant, but like risk people want to see consistency They want to see reliability, and like that to them is like, and they want to see usage, right? So if you can do all that stuff,
I think that, honestly, man, as we continue to operate in this freight market and the overall economy as a whole, like there's a lot that could happen, especially with it being a very important election year and everything else. You're talking about credit lines out there. I can't sit here and say that this will happen out there, but like banks could start rescinding lines of credit, cutting them in half, depending on where things go. Because we're in a very murky time. I truly feel, right? And you need to be doing everything to keep that hypothetical $100,000 credit line at $100,000, as opposed to having it chopped to $50,000 or even, $75,000 or whatever that looks like, because that could severely halt your business. And I think that we're just going to start seeing the fallout from a lot of people out there in business. And, because again, man, if you look at credit card limits and like delinquencies, all of that stuff, if you pay attention to some of those macroeconomic indicators, it's not looking good, man. It's really not. But these are the times that you have to constantly be assessing your finances in your business. What does your P&L look like? Cut any discretionary spending that you don't need. You might not need a $75 coffee budget a day or whatever bullshit like that, right? Like you need to start going through line by line and finding what are the redundancies that are there, what actually is a revenue producing investment in your business, as opposed to, hey, it's really cool to have this TV channel.
Yeah. The thing, it's huge too, right? Because we saw on Triumph's earning reports this past week, on Bank of Montreal's earning reports, they are increasing their write-down budget for equipment financing. So like they are expecting folks to default. They don't like the behavior of how the portfolio is looking. They're likely going to recede on how they're thinking about these loans. They're likely going to start to call capital. They're likely going to start to call assets. So like be up on your payments, be up on how you think about your credit. Like, yeah, if you're not liking how the like home insurance market is looking in Florida, the rates for everybody in Florida is going to go up. So like if you have a loan, if you have a rate, if you have a line and a segment of the economy is not performing, you're going to get painted with a broad brushstroke. So be ready to have a strong set of evidence that you are the exception and not the norm when it comes to health of this type of segment in the economy.
I love it. Sean, and this is probably my favorite one that we've done so far.
Great to see you, man. This is great.
It's always good to have you come on. And, again, I think it's very important to note that everything that we talked about here is completely applicable to every business owner out there, and everybody should be looking into this stuff. Like today, I wouldn't wait. I know it's a holiday. I know there's a bunch of people who want to get out to the lake, but don't wait on this stuff. Do not sleep on this stuff, because like, again, nobody cares about your business but you. And no one's going to have any sympathy for you if you don't take these steps to protect yourself out there. But Sean, how does anybody reach out to you to find out more, my man?
Find us on denim.com. Find me on LinkedIn. You'll find me on X too. I'll reply to some tweets every once in a while. But hey, this weekend, think about those who labor. Shout out to those who labor.
Amen. All right, man. Well, hey, I appreciate you. And if you guys can't find anybody at Denim for some reason, which they're extremely active on social media, you hit me up. I will gladly put you guys in contact with my friends over there. Have a great weekend, everybody. We will be back on Tuesday. I am going to enjoy my morning with my family on Monday. I know. But we will be back on Tuesday, you guys. We got guests coming on next week. And again, we're going to continue to bring these applicable topics to you guys every single day about what you can do to improve your business, not just from a finance side, insurance, sales, all of this stuff, you guys. We're going to continue to bring this to you guys every single day, 8:30 a.m. Pacific, 10:30 Central. I appreciate you guys. I love you guys. And we'll be talking to you soon.